Thanks for having us, and also thanks for your cheery tunes. I hope everyone, yeah, it's now more refreshed for this panel as well. Yeah, I think without further ado, I can see the timer ticking. So let me have everyone introduce yourself, and at the same time also introduce which part of the RWA value chain are you part of, what role do you play in it, and I think everyone would like to know about that as well.
Sure, I can start. Yeah. Hi everyone, my name is Kenneth Chua. I head BD and partnerships at PDAX. So we're a licensed virtual asset service provider in the Philippines. And in this space, we play two roles. So number one is we're a distributor of digital assets and tokenized real-world assets. Since we have a retail app, and we run the crypto widget within Gcash, which is the largest e-wallet in the Philippines. But we also have another role where we are an issuer of tokenized Philippine government bonds. And so, we've gone through the experience of doing that and making that available to users as well.
Good afternoon. This is Henry. I'm the founder and the CEO of DigiFT. DigiFT is a marketplace. It's an exchange. We are the exchange for RWA tokens. The uniqueness is we focus on RWA token. Number two, we are on-chain exchange. Somebody also call it the smart contract-driven DEX. Number three, we are licensed. We are the first one in the world to get a license as a DEX for RWA. We first licensed in Singapore, have the primary and the secondary trading license, and we recently just got a license in Hong Kong.
Hello, everybody. Thank you for your audience. My name is Taka. I head the APAC region for Ledger. Ledger, I think some of you might already know, it's a hardware wallet that has been running for about 10 years now. What people might not know is also it has an enterprise solution, and it's a cold storage solution, but also an offshoot product that we have is a product called TradeLink, which is a collateral management solution. And I think this is where the RWAs can be held and used as collateral for different types of trading purposes or borrowing lend. I can go into that a little bit later, but this is what we provide in the RWA space.
Hi, good afternoon, everyone. My name is Kenny Lee, founder and CEO of SecondSwap. We're a decentralized exchange that has smart contracts similar to DigiFT, except that we go after the locked token markets, what we call the secondary markets. We see that most of the business have been inclined towards spot markets or futures markets, and no one's really tackling the locked token markets, where typically buyers can get discounts and seller can realize their gains before the unlock period. So a whole new TAM there.
Great. Good afternoon, everyone. I'm Andy. I'm the partners at HashKey. HashKey, we're a Hong Kong-based crypto all-in-one shop. I don't know how we have a launch business ranging from product creations, which is tokenization with the business that I'm running, going down to the exchange side, to capital, to OTC. So we are full service in terms of financial services. We're also licensed in Hong Kong. Recently, we also we're in the midst of actually expanding our business outside of Hong Kong as well too. So Southeast Asia is somewhere that we're actually quite looking close at. Thank you.
So last but not least, I guess I'll introduce myself a bit as well. So my name is Chung. I head the Impact Credit business in AYA Foundation. AYA stands for Miracle in Arabic. And we are a VARA regulated platform in Dubai, and what we do is to actually help tokenization of impact projects through credit instruments, make that into smart contracts, and then we allow retail participation with it. But yeah, back to the panel. Yes, thanks everyone for introducing yourself, and I think let's go to what the panel is really talking about in terms of like solving liquidity challenges. So I think ultimately tokenization is supposed to introduce liquidity, but yet now we still have to solve liquidity challenges. So probably just want to take a generic take on how each of you see liquidity, whether you guys solving it or whether there's more barriers actually through tokenization for each of you. Anyone want to go first?
I could go. Yeah, sure. Okay, so I think first and foremost, when I think about tokenization, there's various asset classes that you can tokenize, and I think everybody's trying to find their own sets of assets that they think they can find liquidity. But just because you tokenize something doesn't automatically mean that you can get liquidity. And I'll give you an example. Before I got into the crypto space, I used to work for a hedge fund, and we also tend to invest in private credits or issue private loans. And once we, I would say, maximize the returns that we wanted to get, we wanted to sell that off to another investor. So we'll go to brokers like Goldman, Morgan Stanley, et cetera, and try to sell that. And we had a lot of difficulty selling it. Not because the issuers was bad, not because of the underlying asset was bad. It's just very hard to find people who are interested in private credits on a secondary level, and also they would understand what the underlying assets or the potential returns would be on that, and convince them. Because there's a sludge of other private credits out there. So just because at that point I tokenized it, it's not going to solve its problem, will it? So there's an inherent problem with generally private assets or underlying assets that doesn't come with liquidity in the first place. So when you start to think about, okay, let's do tokenization, how do I get liquidity? We have to think about, have we done the market research first? Have we built something ahead of solving a problem? And tokenization is kind of not really a problem solver unless there's actual demand from the underlying asset. And so the thing is, when you start off with doing tokenization, you have to start thinking about, is this something that people actually want? Because from my experience, I've done private equity, I've done private credits, private loans, et cetera, and none of these had the liquidity I actually wanted in a secondary market or even in a primary market. Generally, if I want to syndicate these out to other investors, it takes quite a long time to find people. So I think the issue first is like we need to do a market research to understand what people want first, and then build it for them.
And maybe if I go to number two, I think this is a great number one talk, a fantastic number one. I think they really hit the nail on the head. You tokenize something that people don't want in the first place, still don't want it. So what's changed? The fact that it's in a token format doesn't solve anything. The part two of that, I would say, to add on to that point, let's say you tokenize something that someone really wants, but you make it inaccessible. I can't even touch it. There's been a lot of talk today on different panels about regulations, licensing, bankruptcy remote structures that really give you the form and substance and confidence to buy it. But what if I tell you, actually, you don't qualify. You're not sitting in the right country, or your passport I don't like, or it's a U.S. and we don't sell to U.S. Or you're not in the U.S., but because you're a U.S. citizen, you still can't touch it. Maybe because you're retail. Well, isn't this part of what we're trying to do for adoption? You want retail to adopt it because retail will drive institutional demand. That's the truth at the end of the day. The institutions would love to trade against each other, but at the end of the day, they will parcel it up and warehouse that risk and bring that to retail anyway. So if we're to solve this, it's really about accessibility. God forbid you create something that everybody wants and no one can touch it. Then what are we doing here anyway? We're hamstringing ourselves for the future. So it becomes number one, private credit or tokenizing something someone wants. And number two, accessibility of providing, permissionless access to everyone.
Can I build on that? Because accessibility, I think, is like a really big aspect for this. And tokenization as a means for financial inclusion, for accessibility. And then ultimately, that's what drives liquidity, right? So in our experience, we were selling government bonds in the Philippines. And before our implementation, there were less than 0.5% of the population had any bonds access. But this was really a core financial product that everyone should be having, right? Should be part of everyone's investment portfolio. So, and the reason for this was that it was really a tech stack that was very difficult to implement and to integrate into, the e-wallets and various banks, right? And so they just didn't do it. But with tokenization, because we already had, a platform for selling digital assets to sell crypto, it was basically just adding another currency there. And then we were able to put in all the platforms that we were available on. And then all of a sudden, all of these places had access to digital bonds, right, in the Philippines. So having that, our hope is that, once people have this access, then that will drive the trading, this will drive the liquidity in the back end.
Yeah, I also want to build on this conversation is, what is liquidity? What do we mean liquidity? What liquidity do we want? There's different definitions of need for liquidity. So one liquidity is so-called accessibility. If you want to buy, can you buy it? Internet gave us the information. You saw this private credit, but you just cannot get it. So there's no liquidity. Money and asset cannot be connected. So tokenization or assets in the token way substantially improved the accessibility because the token can be more easily transferred. So accessibility is a key. But some accessibility, people agree it is a value, but they don't see it's a very big value. For example, people think like a fractionalization of a token is a value because you can use like $1 instead of $100,000 to buy one thing. It is an obvious value, but some people just don't feel it is very big. But if you have 1 million to invest, you don't care it's fractionalized to $10 or $2. Doesn't make a big difference. So that's accessibility definitely is a feature tokenization can provide, but not enough. And also another thing I'm thinking is like a cross-market investment. The financial markets, capital markets so far very rich, but it's very fragmented. You buy stock, go to stock exchange. You buy commodity, commodity marketplace. You have also other jurisdictions. Then if in the future you have some capability can be more integrated, that would be great. That's also accessibility. This is also liquidity. Means in $1 you can buy things across the market and can sell here, buy that. Number three, I would say, is also the way to lower down the barrier to access or lower down the barrier to execute. There's also the increase of liquidity. For example, how many accounts we have, everybody here. We have many accounts. You have more than 3, 5, even 10 bank accounts. And we have a stock account with NASDAQ. We have a stock account with Hong Kong Exchange, Bangkok Exchange, etc. And if you trade a commodity, as you may have some commodity trading accounts, then you need to move your money. If you have 1 million, you need to move the money from this bank account to another bank account, linked to this brokerage account, then you can trade these assets. That's lack of liquidity. It's a discount of liquidity. But think about if the tokens in your own wallet, which means one wallet can hold multiple assets, money is also a token. So money is also in your wallet. Then you can connect your wallet just to different marketplaces. The liquidity will improve. This kind of things, tokenization at this moment can largely solve already. But something the liquidity cannot be easily solved, which people may feel the more pain, is just mentioned if it's a private credit itself, the asset itself does not have liquidity. You want to sell, but nobody want to buy. Yeah. That one probably tokenization itself cannot solve immediately if without like a market maker type of setup.
Andy, you want to go?
It's really interesting that everyone brought out 3 key words here: accessibility, liquidity, and then somewhat, I would say, decentralization/ownership in that way. But I think I want to take it back to a higher, like just take a step back and actually look at a lot of these things. Why are we talking about tokenization and liquidity in today's market? That's actually, I think for a lot of people in the room, it's really a question to solve. I spent the past few days talking to people, and people ask me, why do you want to tokenize a mutual fund? Why do you want to tokenize a piece of art? Why do you want to do that? So the way we actually look at it is that we actually heading into what I call the third wave of unbundling. I just curiously asking the audience, how many of you actually work in fintech? Anyone? Okay, great, okay. So you probably, when I say unbundling, you probably know what I'm talking about, the unbundling of banks and liquidity. That's actually a very common thing for people in fintech. That's something that's been a movement that started in the late 2010s when a lot of people started building applications, unbundle the liquidity within banks and trying to take it out of the system and then move it into different applications in order to drive value for consumers, whether for institutional investors or retail investors. The last time the time before that happened was actually when gold was decentralized, when US dollar became the currency that powers most currency in the world. No longer it's gold anymore, and it became the price in US dollar. Then came the unbundling of banks in liquidity, and I think we're heading into the third one, we're unbundling of liquidity into things that's invested. So things that actually has value, how do you actually create more value from that? And that's how tokenization is going to change that. Driving liquidity, driving access to people, but more importantly, helping these assets actually create value and get it into the hands of investors who actually wants to actually get yield and wants to actually generate more wealth from their own portfolios. That's something I think with the power for tokenization is going to happen, and we are just at the start of this whole revolution, and we're quite excited about this.
Great. I think we touch on a lot of things, right? I think that's a lot about accessibility. And I would classify whatever you guys just all mentioned about on accessibility, because most of it is actually about whether or not you're, like what Taka mentioned, whether or not are you educated enough, right? Are you accessible in that sense? Do you know exactly what the underlying asset is? Whether or not you're qualified as a form of accessibility as well, and many different types of accessibility. So actually just bridging on this point on accessibility, then how are you guys overcoming this accessibility challenge in your own different ways and own different strategies? Is there anything that you guys think is one of the better ways to overcome this accessibility, or is it just like this will kind of like be a thing that will need time to erode on? Any takers? I know it's a hard question.
I can start with this. So I think right now, the analogy I always tell people right now is like we're opening a tap right now. So the tap right now has been always really stuck, and eventually right now it'll open up. So right now I think the tap is just like trickling water into coming out right now, and that's how the accessibility part is happening in terms of liquidity. But where I see that's exciting, especially for our space in Hong Kong, is that I think the tap will actually turn on really quickly. So you actually get a lot more water flowing out. And that's actually when we actually talk to a lot of regulators, they're actually looking to push for secondary market trading. Right now, for most of the tokenization right now, the accessibility is not quite there yet, because only, like a lot of people mentioned, it's only accredited investors or professional investors, those who has wealth and is able to get access to it. And that's not fair. And that's actually not how you actually drive demand and drive people wanting these assets. What's next, I think, for a lot of these kind of the opportunity is allowing for secondary market trading for a lot of these assets, meaning that if regulations allow people to be able to buy these assets, and as long as consumers / investors are being protected in that sense, then the liquidity will start flowing into the market, in which demand for these assets will increase. So right now, the tap is trickling a little bit, but we're seeing a lot of regulations looking to change and bringing secondary market into the market, secondary trading into the market, and I think that's going to change a lot of things in next year or two.
In our experience for accessibility, right? What we've been trying to tap is provide accessibility for normal retail consumers in the Philippines, and we made some very specific decisions in how we would do that, right? So, number one is we didn't target like the crypto natives. We're just targeting normal consumers, which means we're putting it on our app, but we're also putting it on the e-wallet that everyone has, right? We're trading it against fiat, not necessarily stable coins or other crypto, right? And then number three, we're making the experience very Web 2, Web 2.5, right? We're downplaying the tokenized part of it, and we're just selling it as bonds. And of course, in the terms and conditions, like the tokenization part is discussed, but tokenization is really just a tool. It's just a technology for us to make it available. But we just want the experience to be something that's very easy, very accessible, something that people understand and that fits into their daily life without having to understand like what the Web3 wallet is, how to crypto out, what the blockchain is.
And maybe I'll jump in because we have a very different approach to PDAX. It's not a Web 2, Web 3 approach. It's more of a pure Web 3 approach as a DEX. And we find that doing it more in a permissionless way, where it's a bit more anonymous, actually creates more pockets of liquidity that otherwise wouldn't have been there. Because when you have sort of like a combined experience, you get a little bit of like noise on both sides. So someone may say, well, I get yield on this side, I get yield on this side, which way do I go? I'm more comfortable with Web 2, so why don't I stay there? So I appreciate that PDAX is transitioning from one side, the Web 2 side, bringing more liquidity to the Web 3 side. But maybe the other way to look at it is that talking about the demand side of the liquidity equation, the demand, especially in 2025, when we have about $37 billion worth of value being unlocked just this year, the velocity of tokens being printed, 1 million tokens a week. The Coinbase said this, 1 million tokens a week, you have 37 billion of liquidity washing on. And a lot of people I've spoken to during this week, they're like, yeah, the markets are not great. It's not, it just doesn't feel like 2021. I'm like, it'll never feel like 2021 again. It feels like 2025. It feels like, a little bit painful, but are we still winning? Maybe, maybe not. But that's what the demand side feels like. I feel like there's no demand, but there's a lot of supply. So, but how do you get the right supply online? Because if there's so much liquidity coming on, one of the ways that we're doing it at SecondSwap, where we focus on the secondary markets, is bringing the token issuer into the equation. Instead of it sort of a buyer versus seller and we broker deals, which is how most TradFi assets are done today, we bring in the stakeholder as a token issuer and say, you have to bless and approve this as a more of a verified marketplace where you're fully aware of your secondary market trading. You approve it, and we even share revenue with the token issuer and say, you're going to be fully aware of what's going on. There's going to be price discovery. You're going to know who your buyers are. You're going to know who your sellers are because you're approving the transactions. So this way, when someone wants to buy an asset, it's not so much about accessibility. It's more like you're buying this asset and you have a verified marketplace where this is more or less exclusively sold. Like, oh, then I have confidence to come in, and then the demand side will step up.
Henry, Taka, anything to add?
I just have a question, Kenny, on what you mentioned. But how about those kind of non-standard price, the assets, including like a private credit or private debt type of thing, right? There's no benchmark about the pricing. Then how to the price discovery mechanism can effectively work?
Yeah, I guess for private credit, it's a different equation. It's not like a liquid token. So I would say immediately the profile of that is very opaque. That's why the yield is so much higher, because you have a lot of information asymmetry on what's happening with that private credit. You don't know where it's being held. You don't know if it's structurally sound. You don't know if there's cash flow being delivered on the SPV, on the underlying, a lot of other factors. So I would say the best way to look at it is if there's information asymmetry, you have to pick up on that. And for the buyer, it's going to be buyer beware. And that's why the yields are so high. So unless there's more information, then you'll see the price come down. Because once you have information symmetry, then they'll have an equilibrium on the price. But the short answer is let the market dictate it. If people are willing to pay or willing to receive that much for this private credit deal, then people will buy it. If no one believes in it, and you're sitting there, I'm offering 42% yield. Why is no one picking it up? Because people don't believe it. That's just the honest answer.
You want to add? Yeah.
Yeah, nothing to add on that part, but for Ledger, we're agnostic. We're just a technology provider, so we can offer any types of tokens on our platform, whether it be for retail or enterprise clients. Just going back to kind of thinking like how you do the distribution of these in order to kind of create that liquidity, just kind of following on the trail here. Every investor has a different risk tolerance, right? And if you're thinking about, okay, I'm going to sell this to retail, they're obviously not going to buy something that they don't know what the underlying asset is about. So you just mentioned about private credits. They have to do a proper due diligence on the company to see if their cash flow can repay the debt. I mean, no retail person generally is going to do that, even if it's on a secondary market and the information is available. I mean, how many people actually look at annual reports of listed public securities and actually do their own due diligence, right? It's basically generally traded on narrative, themes, people were talking about, etc. So, you have to kind of manage your expectations that if you're going to tokenize a certain asset class, it's probably suited for a certain type of people, right? And, obviously we're all thinking that we want to ultimately sell this to retail, but, again, retail people are not going to do these kind of like very complicated things. So you have to think about what simple stuff can we start off with? What, maybe your mutual funds, your money market funds, very easy to understand. Everybody should have in their portfolio. And then the riskier the asset becomes, like your private equities and all that, then you have to think about another set of investors that you have to go to. So it's not easy as just creating a platform and say, okay, these are all the listed tokens that we've tokenized, please buy it,
So actually, you brought up a very good point, right? So it really goes back to like indicating market demand. I mean, just now, the PDAX spoke about market demand as one of the first steps in terms of minimum viable ecosystem for RWA. So my question is actually very just curious about how do you guys actually test that demand? How do you guys know that you can actually get the demand out, and then eventually you know that any assets and whatnot, there will at least be demand for it. Because testing that is one of the hardest things, right? Because it's a new market, everyone's going to a new thing. It's a new platform sometimes as well. So how do you guys manage that?
It's a very challenging question. But this is also looking at the way of the so-called adoption curve of any new technology coming to the world. Especially those kind of a big technology coming in, we call the novel technology coming in. Usually it's not the day 1, day 2, day 3, you immediately get attractions. There's an adoption curve, but this adoption curve is usually don't go for this way. It's usually go for this kind of step-by-step type of curve. It's not like one slope. So then tokenization, Web3, called the Internet of Generation. Somebody also called it the Internet. Web3 is the Internet for finance. Because Web3 can transfer value. Web2 transfer information only. So Web3 can transfer value, definitely has a more impact, relevance to the financial industry. Of course, many other industries as well, but financial industry, that's why I call the Web3 is the Internet for finance. But it's so novel, that's why the people from day 1 or even day 3 not easily understand what, and also not determined to use it. Because what is a wallet, how to sign your wallet, self-custodian. There's also new concepts. In this regard, I'm a bit on the positive side, optimistic side is we need a little bit of time, maybe a boring answer. We need a little bit of time to see the adoption comes in. But this time is not unique challenge for the adoption of Web3 or token in the digital assets. Actually happened many times in the world. When the internet first come, people ask the same question. What's use internet for? Some people say, yeah, you can send email. Then the people say, what's for? I can write my Christmas card. I don't write letters even. Or then say, okay, you can search information. Then the people say, I want to read the news in the papers. I want to hold the paper and hold the tea. That's my lifestyle. So I don't want the internet. But now looks like this kind of argument is pretty early stage, right? So the internet is many things. So in this regard, I'm on the optimistic side, because when the people realize the value and you were planting trees, the people I think in this room on this stage are the early movers were planting trees. But you have 1 tree or 2 trees, it is not a forest. People if go for the shadow, go for the leisure time, they don't looking for only 1 tree. But you have maybe a couple hundred trees, you can call it as a garden. You can call it as a forest. There's many other things will come out, small animals, etc. They have different kind of scenarios for the spring, summer. I mean, in Singapore, every day summer, that will be different. But that's kind of, you have a forest, you have a different kind of use cases or scenarios. And the people go to the forest to visit. Where are the people planting trees? And also small trees for the moment. But the tree will grow up, and the more trees will become forest.
It's a very good analogy. Anyone else?
So the question is like, how do we forecast demand, right? And figure out how...
Or like test demand.
Test
like
demand.
Validate
right?
demand, yeah.
For me, it's interesting because PDAX, we started from crypto, and then we're moving into real world assets. So I think we can learn a lot from the crypto side of the business. Because I think demand in crypto it's not tested, but demand is created, right? There are more XRP holders on PDAX than there are bond holders in the entire Philippines, right? And these are people who have researched this, they know about this, they buy it, they have high conviction. And that's definitely not something that, there's no reason why it's latent demand for XRP, right? It's something where information was brought out there, people were educated, people were, the narrative was shared, and shared in ways that are very novel, very engaging, and then that's what brings people onto the platform, right? So I think there's some, in addition to, like a lot of the basic financial products and financial education, but I think we could learn a bit from that space, right? How do we actually educate people in a way that's very engaging, right? How do we talk about bonds not in a lecture, but in a TikTok video, right? In a dance video for 30 seconds and people get it, right? Because that's how they buy Fortcoin and Melania and XRP, right?
my experience prior to Ledger being 4 years at Copper, we had this issue. We had this problem. Clients didn't want to pay custody fees, right? Nobody actually wants to pay custody fees. And we had a product where it was an off-exchange product, and people can leave collateral there to mirror the assets onto the exchange. Now, they were saying that it's too expensive. They don't want to pay for this. They want this for free. And we explored many ways that people can actually make some yield off of their collateral. So we started off with using like Lido. So they can use ETH as collateral or staked ETH as collateral while they earn 3% annually. And that wasn't enough because they frequently had margin calls and this and that. So we thought, okay, what else can we do? Is there like stable coins out there that yield stuff? So yeah, we found the hash notes token, etc. And it seemed like it was a great option to have so that they can earn 4 or 5%, which would pay for the rest of the custody fees and more. And then came the tokenized money market funds also yielding 4 or 5%, which can do the same. So the approach always has to be, how do I solve a problem? And I just go back to what I said earlier on, is that we always, these tokens will be used to solve a problem for some people. And it's not like all these asset classes are wanted by everybody else, so you have to find something that's suitable. In this case, the collateral doesn't move value so much, right? I mean, it's a money market fund or a stable coin. It's not going to move in value, so it solves the fees, it solves the margin calls. So I think you have to look at the problem first, and then go. This is how any business should be built anyway, right? It doesn't need to be kind of explained here, but I mean that's simply what it should be.
Yeah, maybe I'll just simplify. I guess I'll just add on to Kenneth's point is demand is demand. Forecasting demand can sometimes be a bit of a fool's gold, because if you ask somebody, would you buy this? Like, generally, yeah, yes, but what? Okay, yes, but can't connect my wallet. Yes, I forgot to bring my ledger. Yes, but all these type of things. So there's a bit of friction still in the process today, and that's something we need to recognize. If you try to use DeFi or Web3 wallets today, it's still not a generally mainstream move. So the demand is there, but if I had to tell you, you have to hop around the stage 5 times before I'll even open this demand for you, you're like, I don't know about that, right? So there is latent demand for these products because very smart people have developed it. And we know it works, and it sells in the Web2 world. We know that this will move because in a tokenized format, it's infinitely more transferable, it's more permissionless, it's easier, it's more fungible, for yourself. But there's still a lot of friction in this process that's holding back demand.
I'll take it from a different perspective. I used to build games myself, quite a bit of games, back in Tencent. And I worked 2.5 years on the GameFi project. I spent hours and hours asking in different groups, why do you want to buy my token? I asked the question, and I get a lot of different answers. Some people just want to buy a token because they think this is cool, this is new, I just want to hold on to it. Some people want to do wealth generation. Some people want to make a bet. And that's actually goes back to what Taka mentioned about the risk profile side of things. I think that's kind of where we see there is no one single product that's suitable for any investor. Everyone goes to buy these tokenized products for a specific reason. And for us, this is why we actually try and look at products that's in two-sided spectrum, either something really conservative or something that's really high risk. Because then you actually get to test whether or not this person actually wants to buy it. So I actually spent a lot of time talking to a lot of people in different communities, as well as talking to different people and asking the question, if there's a tokenized asset on chain, what would you want to buy? And very surprisingly, actually, a lot of people want to buy something more on the conservative side of the spectrum, especially money market ETF funds, tokenized money market ETF funds. Now, a lot of people ask me, why would you want to buy a tokenized money ETF fund when they actually can just buy it on anywhere, right? You just buy it on any stock exchange. It's readily available. The Gen Z is actually telling me something very different. A lot of the Gen Z today, they actually buy tokens themselves. And they're actually really open to blockchain as a technology and actually buying tokenized assets. They actually want something they can actually fractionalize and actually get. So they want to invest as low money as they can, but still get yield. So for money market funds, it's really simple. yields around 3.6 to 4% usually. And if you pay $1 in there, T plus 0 transactions, since a lot of them are living check by check, especially in Southeast Asia, I can put my money and take my money out very easily. And that actually goes back to how a lot of the in a lot of the fintechs, they offer similar products as well too, allowing people to actually put money in and get out quickly. It's a product market fit, the way I looked at it. And so that's actually something that we found, I actually quite find perplexing originally, but it's also quite interesting to see that there's demand for this. But more importantly, from our perspective, I think where the money for the exchange side is actually when you actually can play around with leverage for these products as well too. So we try to, when we actually look at conservative products, we actually want to make sure the underlying assets as clean as possible. Then if we, in one day we decide to open up leverage or trading or something else, then we actually could do more leverage. For us, that's a fee based, that's a fee for us. So it's actually a win for us if we can actually do that. But from a consumer perspective, they're able to get access to something that's tokenized, something easy. And very accessible for them, and they can take out anytime they want. On the more risky side, come and find me, I'll tell you. I don't want to talk on stage right now, sorry.
Yeah. No worries. Anyways, I think this is very interesting perspective, right? Everyone shared, I mean, how you think of it from your own perspective, and also like, I mean, a lot of it come from different experiences that you guys have previously, like from GameFi or even from Copper, and how you guys can bring that into, you know, the new edge of, I guess, new era of RWAs. And I think that's where a lot of things need to change. But going back to your analogy on like the tap problem, so I mean, the tap is, I guess, opening, unopened, some sort of friction right there, as what Kenny mentioned. But what exactly are these challenges to really open the tap? What do you guys feel are the main thing? Is it regulations? Is it really just understanding, or what kind of other problems arise when it comes to like actually accessing the real liquidity?
Maybe I start with welcome to debate. When we say the RW tokenization, right, usually talk about three stages, three things: tokenization, distribution, application. Tokenization is bring RW on chain. You can just mirror it or twin, digital twin. It's a tech job, no license needed. Actually, a lot of people are doing it. Then distribution into sell. If it's a financial instruments, etc., you will trigger the licensing issue, blah, blah, regulation comes in. So far, the people are more talking about tokenization and the distribution for the moment. But simply selling this token probably a little bit boring. And we started with standard product, like a money market fund. It's a boring product. Boring product and a simple selling, you don't expect a big phenomenon behind that. Then, of course, selling T-bills for retail clients, etc., you can create a phenomenon in this segment. But broadly, not too much. Then coming to is why I buy this asset in a token way. Broadly, we can call it application. No matter can create leverage or cross market, or you can have some A plus B type of return. A coming from the T-bill itself, B because you're buying from this application we call the protocol on this chain, you get some platform token airdrop to you. So you have A plus B type of return. This is our different type of applications. I would say the market in the last 1 or 2 years, quickly we're moving from tokenization to distribution. People get it, but still a little bit too simple. But a lot of smart people are working on the applications. How to build the application, then we look at the token composability, interoperability, immutable, blah, blah, all the things to build these applications. Then coming to the question is, the people, smart people coming to find some interesting, attractive applications, no matter because of a higher return, no matter because of the fun way to use it, like a game token or whatever. Then this kind of application come out, you will attract like a 200 million or 2 billion, then another 100 million, 200 billion. Then put together, people realize that will be the future of capital markets.
I guess one experience at PDAX, so I handle token listing for both the crypto and RWA and non-RWA, right? And the experience of listing a non-RWA token is so much easier than listing an RWA token. And I think for the RWA tokens, we're kind of getting the worst of the Web3 world and the old school world. So, for example, if you want to list, Fartcoin, right? It's super simple. You pick it up somewhere. There are many places where you can buy it. You convert it. You sell it locally. You have a legal opinion, and you're done, right? But if it was a money market fund, right? So, on the traditional side, now it's the security. You now need to have it approved. You have to figure out which country it's listed in. Does it have a treaty with our country? Does KYC work? How do we pass information? So all of these legacy processes, which cuts us off and cuts off Philippine liquidity from the international liquidity, main liquidity pools, right? And then on the Web3 side, I think we've also started balkanizing the liquidity sources. So, if I want a US money market fund, there are 10 different variants of this, all of them different trustworthiness, all of them different legal frameworks, not tradable with one another, and we've now cut it up across 100 different projects. And then these 100 different projects, we put them on 10 different chains, right? So now each one of these pots is really, really balkanized now, and you're not able to get all the trading and concentrate all the liquidity there, right? So I think so on both sides, we kind of need to find ways to simplify things, right? And pull together all these different pockets.
Anyone want to add the last response?
I'll just say one quick thing. Sorry. I think the biggest barrier is not really liquidity. To be honest, it's not a supply and demand issue. It's how do we kick down the walls that's preventing us from taking a step forward. So actually, quite great with Kenneth here. A lot of times, I wish we have something similar to FX today, where it's just liquid. It's just everyone can get access to it, and everyone can actually trade it any kind of platform. I think that's the dream for us, if one day, for tokenized asset to be traded that way. It's just right now, it's sitting in different secluded locations, and it's not free. It's not flowing as rapidly as we want due to a variety of different reasons, whether it's regulatory risk or whether it's just education from investors. It's going to take time. And once we break down that barrier, I think the world will move much faster.
Yeah, I would say that around the same thing. If all the factors point up, why isn't it happening yet? We're really, really working hard to get there with following every single rule, but it's not there. Maybe it points to something larger, like maybe a generational change. If it's not our generation where we're used to bank vaults and then paper checkbooks, and then becomes your phone, and then in the future it's in your neck or something like that. It's that's where it's going to evolve into, and it becomes a lot more seamless because the friction points about regulatory and compliance and all that stuff is not really needed anymore, because by that time we'll all be chipped up, and every time you walk through a turnstile, oh, you passed, here's a token. So there's a certain point where all this friction and all these rules will be embedded into us somehow, some way. And maybe AI or something else, robotics, will figure out that, yeah, you qualify for this or you don't qualify for this based on whatever rule sets. And time will show that this will work.
Yeah, I think professional investors that have access to these underlying assets don't really need tokenization at all, right? So the ultimate liquidity unlock is getting it to retail users. And getting it to retail users, you have various barriers with regulatory difficulties, and you need to find good distribution partners to get it into their hands. The ideal solution is that, hey, I can open up my digital wealth management platform, pick and choose different fractionalized assets and create my own portfolio, but regulation doesn't allow us to do that. Maybe it's on the digital asset management side or wealth management side to create something like that, but again, it's about distribution and finding those channels that would allow them to kind of cross over regulatory boundaries to get into retail's hands, and that's going to take time. But I'd like to see the industry start to kind of nail down those distribution channels.
You want to go for it?
Yeah, actually, a little bit different view is, when the new things come in, people usually don't complain you don't have it. Like before, we have e-commerce, online merchant, right? People never complain, I cannot buy the apples. I cannot buy the oranges because I can go to a supermarket. Before we have a supermarket, people also don't complain, I cannot buy the orange. Until the new things coming in, people think they forget how the previous way. Just look at this room if asked, how do you listen to music? How do you get your music? Streaming, right? But before streaming, do we complain we cannot hear music? No, we buy CDs. But when was our last time bought a CD? Forgot. But actually not very long time ago. So that's why most of people still have CDs at home. But before CD, we also don't complain we cannot listen to music because we have a cassette. Before cassette, people also don't complain I don't have a music because I go to the theater. But then coming to the now is, and the people seeing is everybody forget all the previous things, just go to or maybe 90% go to the streaming. So I would say the same logic may apply to the so-called tokenization adoption in the capital markets.
Sorry, got to cut, yes. And at the same time, I mean, I know we overshot. I just end off with one last question for everyone, just a very quick note. If I put you in a room with like all retail investors today, and you got one thing to tell them about RWA, what will you say? Like a quick one-liner.
It's yield on chain. Come get it.
Kenny?
Yeah, just open up your wallet and buy. You know, just go long only, man.
Investors beware.
I would say be curious, give it a try.
Yeah.
And for me, it's buy it before you buy Fortcoin.
With that, thanks so much. Thank you everyone on the panel. And thanks for this exciting,